This video is intended for those who are willing to accept the truth about the stock market today. If you do not want the real reasons, please proceed to the nearest exit. Today we witness the largest monetary experiment that has ever occurred in the history of the world. Central banks have been printing money out of thin air and buying equities, bonds, ETFs, and derivatives. Initially, this was to rescue the financial system after the crisis. Today, their plans are much more sinister. You came here for the truth, so let me unveil that for you. Today we're going to look at what the central banks have been up to. You're not going to get this information from your government. You're not going to get it from the mainstream media, the financial media, or even the alternative media. You tune into the Money GPS to dig another layer deeper. We're going to show you this actually from the source themselves. I'm going to show you all the details you need to know. Let's begin by taking a look at the SEC's own website. Okay, we have this. It's an actual documented fact. Right here, you can scroll down to the bottom. I will highlight it for all those out there. Swiss National Bank. Okay, we're going to have our focus on the Swiss National Bank today. I'm also going to show you other central banks around the world and what they are doing. You can see the filing date, brand new, out of August, but actually the report itself is from the end of June, and that is the newest data. Okay, they didn't report last time around, but now today we get to find out what they have been up to as of the most recent information. And I'm going to show you this data. Now you can look at it on the SEC's own website. They have all the documents that you need here. But the way that they organize it is not good. Okay, it's very messy. It's not for you to look through. It's more of a documentation, a database, okay? So there are other websites out there that organize all the data based on these reports. And I will show you two today that I constantly have shown in the past. I think they're very good at what they do. Actually, I'll show you three. This one here beginning is Fintel, F-I-N-T-E-L, all right? So we are looking right here at that June 30th, 2018 time frame, and this will show you $87 billion. That's the Swiss National Bank's market value. They moved from being a central bank to being a hedge fund, and that's really what's happening. Now, what are these stocks that are on the top of the list? You can look through it all, see everything that they own according to the SEC's own filings. This is something that I believe everybody should be paying attention to. Today we're seeing the stock market hitting record highs and everybody's cheering because everything is so good. But what about the fact that central banks are printing money? Is that a factor at all? We are seeing this right now, not investors. The central banks are now the biggest investors in equities, the biggest investors in bonds, in ETFs. They are the biggest investors. That should be worrisome to all of those who are looking into this as an asset class. Apple on the top of the list. Number 2, Microsoft, Amazon, Facebook, Google, or Alphabet. And you can go through the list and see all the other big names, whether it's Cisco and Coca-Cola, Pepsi and MasterCard, and so on. All the big names are on here. The central banks around the world, number 1, they're bailing out the corporations by using their printed fiat currency. And number 2, they're collecting assets. And that really is the most important part. So let's move on here. I'm going to show you some other data. Remember, this is coming from the filing itself, all right? All of this information isn't something that I made up, although I've been accused of that many times before. You can see it for yourself. Don't even click on the link in the description under sources. Actually go to a search engine, type in SEC 13F. That's 1, 3, and the letter F. And then you can type in Swiss National Bank. You will get this information for yourself, okay? So then you look at this same sort of information here, just showing you how much they've increased since the previous filing here as of the end of March, okay? So in 2018, they had increased massive positions here that we're talking about. Billions of dollars have been added in this period of time. And again, same, we've got the FANG stocks, FANG Plus stocks essentially that we're looking at here. All the big names, they're buying them all to one degree or another. I mean, they have Apple on the top of their list, and Warren Buffett has been taking note and of course been purchasing this as well. All the other big institutional investors are owning the same type of stocks. So many people are basically chasing along and they're trying to accomplish the same thing. Whatever the central banks are doing, institutional investors are doing, and then of course the retail investors, the minnows, attaching themselves to the big fish. Okay, that's what's really occurring. You could see the positions here that they have today. Now there's a little bit more detail in the next website I will show you here. This is Whale Wisdom. The previous was Holdings Channel. Okay, all the links will be under sources if you're interested, but you can just go to a search engine, as I said, and type in Swiss National Bank 13F SEC. Okay, so this right here is very similar information, but more detail on that. You could see what they've been selling, Time Warner being one of those, Monsanto, Calgene, and others, whereas they've been buying into the tech stocks. Okay, that's really what they've been doing. They bought into Netflix and Microsoft and Facebook and so on. So you could see that their top holdings here is in this list, and the fact that they own $87 billion. Previously, they had, in the previous filing, $82 billion. So they've added or gained, now their market value anyway, has increased by $5 billion. We're talking about massive quantities right here. And this should be worrisome. It shouldn't be supportive to you. It should be worrisome, because just as easily as they printed the money, they could dry up the liquidity. That concerns me. All right, so they sold 59 stocks, additional purchases is 999 stocks, new purchases 101 stocks, and so on. Okay, if you're interested in looking at that, you can see for yourself. All right, I want to show you this. We're talking about stock markets that have hit all-time record highs. But wait a second, if I look globally, the stock market is down. Global stock market's down 14% last time I checked. If I look at China's stock market, it's in a bear market on the Shanghai Composite. If I look at emerging markets, they're down as well. If I look at bank stocks globally, they are down. If I look at Deutsche Bank, it is down. If I look at the global systemically important banks, okay, the too big to fail banks, they're in a bear market as well. What's up? Tell me what's up right now. We got the S&P 500, we got the NASDAQ, and essentially US stocks are rising because I don't know if you noticed this, by the way. This is why. The top 10 holdings are nearly 20%. Okay? And if you look at a lot of these different portfolios, you're going to see essentially a handful of stocks comprising people's portfolios for the majority of it. Okay? And that's not good, especially when you have a type of fund like this. An average individual, they got their 7 shares of Amazon and they're happy with that. I understand if all you have is 7 shares, you probably just buy one. But we're talking about $87 billion worth. Okay, these are monster numbers coming out of just one central bank. I'm going to show you bigger numbers in just a second. So this is what we have. We have a concentration of wealth essentially. Okay, and that has been pushing the market up. Look at the breadth, and you can see what's happening today as a real indicator, not just these nominal factors. This is very silly to look at this. Will they continue to increase? Let's just answer that question right now. Will stocks continue to increase? As long as central banks are printing money, buying shares, the stocks can increase. Of course. I never, ever would disagree with that. But they hold their finger on the trigger and they can pull it at any moment. What happened in 2008? They could have bought up the shares. They could have done that, but they waited until assets crashed. Then they stepped in. Why not? Why wouldn't they just buy up the shares before that? Or when it started to go down? No. They waited until the S&P 500 hit 666, and then they said, we're going to step in. Buying assets on the cheap is their goal. That's their desire, but the average person can't wrap their mind around it. All they have is their 7 shares and they're happy. They're very, very blissful because of those. And that's fine. If that's what they're doing, by all means. But you have to understand why. The Swiss National Bank now has about 20% of its reserves in equities, up from about 7% a decade ago. More than half of that is in US equities. Okay, that's primarily where they're investing. And a central bank shouldn't be investing. A central bank is supposed to, what I don't even agree with a central bank in the first place, but what they're supposed to do is issue the currency. That's it. They have their label on the bills, and that's it. They are not supposed to be a hedge fund, but today that's just not the case anymore. I mean, they're all hedge funds today. And to say that the Bank of Japan has become a player in that country's equity market is an understatement. The BOJ currently owns 75% of the Japanese ETFs. Again, up sharply from just a few years ago. Other central banks include the European Central Bank, the ECB. The South African Reserve Bank also made similar purchases, although Japan and Switzerland are among the most aggressive buyers in equities. And I do cover that here on the channel regularly, okay? If the idea of central bank owning a significant amount of stock in a company sounds strange to you, that's hardly surprising. Okay, talking about the Fed and how they are not able to do that, but they can have subsidiaries which do. A lot of people are aware of that. This is talking about another issue here. One is China's State Administration of Foreign Exchange, SAFE, part of the People's Bank of China, the biggest overall public sector investor with $3.9 trillion under management, well ahead of the Bank of Japan and Japan's Government Pension Investment Fund, each with $1.3 trillion. SAFE's investment include significant holdings in Europe. Okay, very important. The PBOC itself has been directly buying minority equity stakes in important European companies. The People's Bank of China buys shares in Europe. Do you understand? This is coming out of the Huffington Post, but I think it's quoting USA Today, okay? So this is the information coming right out of this source. Another large public sector equity owner is the Swiss National Bank, $480 billion under management. The Swiss Central Bank had 15% of its foreign exchange assets, or $72 billion in equities at the end of 2013. This article is from a little while ago, okay? So I've shown you the more recent data, which simply further solidifies the fact that they have been increasing their positions. All right, now you're looking at USA Today. Now check this out. This is unbelievable, okay? Most of the people, 80% of the people have stopped watching the video by now, but you're still here, and that's why you get all the good details. Leave them till the end. Evidence of equity buying by central banks and other public sector investors has emerged from large-scale survey compiled by the Official Monetary and Financial Institutions Forum, that's a mouthful, OMFIF, a global research and advisory group, all right? So they said that this is talking about, the previous time frame, surveyed $29 trillion worth of investments held by 400 public sector institutions in 162 countries. This includes 157 central banks, among other things. All right? The assets of these 400 global public investors comprises $13 trillion at central banks. $13 trillion, that's including gold. $13 trillion at the central banks. All right. In the aftermath of the financial crisis, different forms of state capitalism have come to the fore. The report says whether or not the trend is a good thing or not, it's open to be questioned. What is incontestable is that this is happening. It's happening today. Then it also talks about Norway's own central bank engaging in their own purchases of equities, okay? A lot of people don't understand what the significance of this is, and that's what I'm here to do. Yes, they're buying. We know that. Some people acknowledge it. Most won't. Most have no care, no worry at all. But you may have heard of this individual before, and he's the Georgetown University historian, Professor Carroll Quigley. All right? For those who don't know, he's considered to be the librarian of the international bankers. And in his 1966 book, Tragedy and Hope, he wrote that their aim was, quote, nothing less than to create a world system of financial control in private hands, able to dominate the political system of each country and the economy of the world as a whole. The system was to be controlled in a feudalist fashion by the central banks of the world, acting in concert by secret agreements. Central banks that were, quote, were themselves private corporations. That is what they do. Maybe you could say, well, they're not private. Maybe you could say that they're quasi-government. Do they act with your best interest in mind? I don't think so. Because instead of owning shares of these companies, why wouldn't they just give you the money? If that's really what they wanted to do, was to support you, to support the government, and to support the economy, why wouldn't they just print money and give it to you? They are a for-profit institution, and they have shareholders who they must be doing all that work for. Now, people will say, well, that's not the case. All the profit goes back to the government and so on. You don't know that. You don't know that. There's no mechanism for that to exist today. And you, quite frankly, simply do not have that information. So all I can go by is what I see. I see a hedge fund being built right in front of my very eyes. All the central banks are doing it, whether they're buying derivatives, whether they're buying up, the equities and so on. I never see that profit. I never see it, and no matter how much money they make, none of it ever comes back into the system. We never say, you know what, everyone, you don't have to pay taxes this year. We made so much profit on our equity investment that we're just gonna give it back to you in the form of tax breaks or so on. That's not gonna happen. And anybody that believes this lunacy that's being told to you in the mainstream media or by your politicians simply is deluding themselves. Okay, there's more info if you want in here, but I just wanted to cover the fact that this is an article out of Forbes basically suggesting to us what I just mentioned. Okay, that they have been engaging in these policies not to the benefits of you and I, but to enrich themselves. Okay, people don't understand what's happening. The central banks print money out of thin air, and that pushes the prices higher. But you might say to me, well, why in the world would they then want to see prices come down? Look, if you were going with an unlimited time frame, you didn't have a lifetime to worry about it. You had an unlimited, let's just say even hundreds or thousands of years that your timeline was based on. Would you care if your stocks drop for the next 10 years? No. You wouldn't, because you'd know they would eventually come back up. And the best part about it is when the stocks go down, you print more money in order to, accumulate more assets. It's a genius plan on their part. Of course, it's at our expense. But this is what they're doing. You can track it for yourself. Don't trust me. Look into the 13F filings, and you're able to see a lot of this information. I hope that you found this informative. If you did, please give me a thumbs up. I want you to look into the comment section below, and I want you to really address the fools, and I use that word intentionally, the fools, because they have been fooled into believing why the true reasons why the stock market has risen. Many people acknowledge the reason why it has risen, but simply want to ride the wave. That's one thing. And you know what? I don't hold anything back against anybody and what they want to do. But you have to know the reasons why, or else you will never understand when it's time to sell. All right. And of course, if you don't like any of this information, post the reasons why below. You're going to see a lot of individuals that have been fooled, and it's truly unfortunate the way that things have gone today's day and age when the information is available to you. If you want the financial education that was not taught to you in schools, these two books have it all. I talk about the central banks and their activities. I talk about the financial system from the ground up. You'll know everything from A to Z. You can check them out at the link in the description here. If you're more interested in the audiobook, you can get that at themoneygps.com.